This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com, and welcome to today's morning call. It is Wednesday. It is late August, but there is action, there's volatility, and there's movement, and these markets are a little sneaky. Yesterday our markets had its first real rally attempt, right? We gapped up, held the market all day long, and then right around 2 o'clock things started to fade, and then boom, you had an avalanche in that last hour, punishing anyone who bought after the gap up, that didn't have stops. And we closed negative, went down a few hundred points, and basically that might have been a little invitation for guys who have been thinking short to add to their shorts. So if you're short overnight, you actually have to think about what to do next. Same way if you got stopped out of your longs that you were trying to hold on to, you got to figure out whether or not this open is buyable or not. As far as overseas are concerned, Asia's doing everything it can to try and, keep this market from selling off or keep their market from selling off. Volatile session, I think the Shanghai closed down like 1.3% and still can't pretty much find some footing. That market's trying to hold on to about 2,800, but the longer it stays below 3,200, it's still going to be a source of volatility. If you look at the chart of the FXI, we talked about this many different times, and obviously entries and exits matter. A lot of guys who were accumulating it over the past few years enjoyed a very nice, trending or somewhat parabolic move in late, April to then, boom, think about a potential normal correction. If you sold some below the 8 and 21 day, you didn't get caught in this mess below the 200 day, and then, the overthrow move. So, this bear flag type of move, gave some clues that more volatility could come. And then yesterday, you had the reversal on Monday. They sold it, into the close, and it's just like a choppy mess. And for now, a lot of the markets are choppy messes. So the question is, first of all, if you're a long-term investor, keep putting your flows in, keep putting your monthly money in. Make sure it's into index type funds where, if you have a long-term time horizon, this is going to help your average cost. You survived 2000 tech crush, tech debacle. You survived the 2007, 2008 financial crisis, and you'll survive this. So don't have the TV get yourself out of your macro trading accounts. As far as your active trading accounts, which is where my sweet spot is, the question is today, will they fade this open also, or does it push first? And what type of room do we have up to yesterday's highs? So we're in this new range. So we have to figure out how to trade it. So let's go to the SPX first. You'll see, this was your, obviously, I'm going to just go through it one more time. This was your upper channel, okay? And a lot of people are like, how did this happen? How did I miss the short, or how did I get stuck? Well, you know what? You got stuck if you didn't see this inside wedge break lower. You got stuck if you didn't sell your positions when this range resolved below the 200 day and below 2040. And you got stuck because you weren't watching, and then that happens. If you're a trader, you might have even made a really good amount of money short into this, because when ranges break, they break fast, and everyone was complaining about the action in this 7-month range. Well, now it changed. So, we mapped out support from last October. I do think we went a little bit below this on Monday, but it didn't register. We've talked about the actual trend, and trends do change. Okay, the trend that was intact all the way from basically, this spot, okay, broke for the first time. So that means the trend has changed. Okay, you could even go all the way back here to see how, this lines up. This actually, this longer term trend comes in a little bit. Look at that. So the trend from, 2012, from that low, broke, okay, but the trend all the way back from, 2011, 2012, is coming right here. So that's another spot. So important spot number one, fill the void. Here's your next important spot. So we'll see how we handle it. And usually, things go back and forth many times before they decide what the next trade is, because institutions have to distribute stock. Otherwise, they're stuck also, and they usually don't get stuck. So anyway, here is your low end of the support. This is, 1867. I'm going to go to the spiders because I do think that went lower than that. Okay, so here is your low end of the support, which is right here. This is your low end. You write this down. This is 182.40. This is yesterday's low. And then what happened yesterday? The market got rejected at Monday's high, which is 195.84. Okay, yesterday's high is 195.50. So what this is doing, it's creating a nice little pivot here. So at least we know where defined resistance 1 is. So if the market does decide to get above this in the coming sessions, we know where, it's going to be a fight between the bulls and the bears. We shall see. But for today, you go to your 5-minute chart to see where the spiders broke down from, which was a doozy, okay, to see perhaps where, you could re-short if you're looking to re-short. So spiders broke down basically right around here. This is about 192.50. So I would say this is your resistance 1, 192.50-ish. Okay, 190, actually probably like a zone, 192 to 193 would be a resistance zone. So if it's here in the first 30 minutes and you want to short the spiders, this is probably your spot. And this is also the VWAP. Now let me explain something to you. The VWAP is pretty much, computers right now are doing what market makers used to do back in the day when you had Sherwood, when you had Knight, when you had all these people working orders for you. Now they have order flow, they give it to a computer, they say, I just want to be right around the VWAP. So with the crazy action of the past 2 days, the VWAP was $5 higher. So that means a lot of institutions, don't have good prices. So their average cost is 50 handles higher, so they're not feeling so good. So the market always wants to try and trend back to the VWAP. So when you're trading intraday, if you're well above the VWAP, be careful buying because it's extended, and if you're well below it, be careful shorting because it tries to go back. Just little, fuel for thought. So go back here. So this would be resistance 1. Area. This is where, if you, in the first 15 minutes, just say it puts a high in around 192.47, comes off at a 192, and you want to short versus that high for a potential pullback, that's your spot. If it, goes to 192.50, pulls into 192, holds for a while, and you have an open gap that it's actually trying to hold, kind of like what happened in here, you could then buy versus that for some type of move higher, but we shall see. So this would be resistance 1 spot. Resistance 2 spot is obviously back at that 195.50. And if we happen to fade, okay, then you have to know where the pivot is from yesterday, and the pivot low from yesterday happens to be 186.92. So you really could do this in any sector you're trading today. So if you come in flat today and you want to trade these ranges, you could look where we broke down yesterday afternoon as a resistance spot, and then where it stalled in the morning, which was yesterday's high and Monday's high. So that's what I'm looking to gauge at. You look at the Qs, you could do the same thing. Everything is basically broken. All the momentum trends are gone. Okay, and that happened, earlier in the week. So that trade is behind you. So now the question is, with the support here, how long does it stay on the right side of this trend? How long does it stay below the 200-day? And how do you make money within there? So this is yesterday's move, okay? Kind of nudged a little bit above the prior high and then sold down. So, still above, well above where it was Monday. So, this is your inside range. So if you go to your 5-minute chart, I'm only going to do this with the Qs also, and you see where it broke down from. Okay, first of all, in the first little bit of the day, it held the gap. That was yesterday. So if you weren't long and you said, okay, I'm going to, piece in versus this gap, that was your spot, and it gave you a little bit of a push before this small little red dog reversal failure there on the 5-minute. Okay, and then obviously, broke support and got crushed. So with that being said, kind of like the spiders, okay, here's your Qs between, 101 and 101.50. would be a spot that if you didn't short the close, okay, or if you bought the close, you might want to sell some, or at least try it there, and then figure out what happens in the first hour. And then obviously support 2 would be the prior high. So support 1, support 2, write those down. I'm not going to do that for you in the IBB, which is the same. The Russell is pretty similar to that, and also the bank. So though if you're trading the indices, look where we broke down from yesterday afternoon. Look where yesterday and Monday's high, come into play together. Okay, as far as stocks, there's like 7, 8 stocks that are in my universe now that all went green on Monday that were in my universe before, but they're all broken. There's no, I'm going to sit in these, I'm going to hold them, they're going to break out. No, these are just now establishing new ranges, and some will give us clues whether there's a bigger bounce to come, a little bit more power, or not. Okay, and Apple, for instance, was, the trade. Okay, Apple obviously well before this, broke below this channel. So hopefully most of you got out of your Apple here when it broke this 122 after a gap down after earnings that was unfilled. That gave you some nice clues, weaknesses to come below all moving averages, and then it lost a 200-day right there. Then we had some nice trades. I remember these trades: red dog reversal here, bounce back, red dog reversal here, less of a bounce, and then boom. So now this is where we are. So basically, you had some follow through to Monday's move, got rejected around 112, closed on lows. It's going to be up a few dollars today. So same type of concept here. Can it be bought for a move back? Because I think it's like 107 now for a move back to this area where it's going to be big resistance around 111, or can you fade it versus that? So if you go to your 5-minute chart, you'll see how quickly at the end of the day Apple came in. So with that being said, there's going to be some resistance coming right around here, which is around 107.50-ish to 108. Spent a lot of time in this little zone. So if you were looking to fade that move or fade a move in Apple, that's your spot to potentially short versus that. If it goes through this and doesn't pull in and the futures come down and it shows relative strength, maybe there's room a little bit more to the upside. But again, not a great setup. There's not a lot of great setups out there. It's just these range type things. And if it happens to go from green to red, then you got to really watch out for this pivot, which is at 103.50. I could do the same thing for every one of these stocks, for Netflix and for Google and for Facebook and for Disney. These are all the stocks that have liquidity, and these are the stocks that, well, not Google, that you could trade these ranges of. I'll show you real quickly, like Netflix. Netflix, we'll see what happens today. Netflix, you had your out well before this. Here's when the upper wedge broke. This is when it lost the 8 and 21 day. This is when you sell momentum stocks as a momentum trader. Then you had you move all the way down to the 200-day. So now the question is, can it hold higher? So you have an inside range right here. So you trade the inside range. And at this point, it failed at the previous 2 highs. So this is your new little resistance pivot. Your resistance pivot is basically around 108.5, 109. And now, its support is around this. This was 102. Yesterday's low is 101. So you have this little inside range. So we'll figure out what goes on here. Does it break back below it, or does it hold in here? And then if the market gets better, does it retrace higher? At this point, again, maybe on an up open like today, if you see the futures go and you see Netflix not go and you see divergence, you get short versus this. If all of a sudden futures get crushed and it's hanging out over here, doesn't go down, maybe it's telling you a little bit later in the day there's a trade through there. But overall, the momentum is gone, and now it needs time. If you're in it for multiple years, congratulations. You've been holding this thing, and this part of it doesn't matter. Actually, it matters a little bit to you, I guess from all the way down here. But overall, big time momentum break right there. Now it's going to take a lot of time to rebuild on the weekly and on the daily. If you're maneuvering it, maneuver it. Google was upgraded by Goldman Sachs with an $800 price target. To me, it's loose, wide, hard to gauge. I guess we'll see if anything could break above this pivot. So every single stock I'm looking at has this resistance pivot. Okay, obviously Google broke down from here when it broke the 6 to 80 range. Okay, so that was your way out, or maybe you get in short. And then you had your bounce, fell into resistance, and now it's probably going to open up right around the 640 area on the upgrade, and you'll see, does anything have the power to get above this and hold above this? And that'll give us some clues maybe if the market could actually get a stronger bounce or a feeble bounce. Amazon, I'm not really saying much here. Amazon broke this inside wedge from earnings to the downside, or this channel. Right there, I gave you some clues to get out of the way that it's not going to break above this, and then boom, it came back right to where it broke out from. So a decent, trade if you got long, on that crazy volatility Monday, and then what did it do? It failed at the prior high. So you see all these patterns adding up. Every one of these names that gapped up yesterday got rejected at Monday's high because we're in a new range. So yesterday we traded into the lows of the day, creating a new pivot support, and now today with the futures we're back up. So the question is, do they fail there again? Do they push through, come back below and do a red dog reversal? Or do they hold below and fade down, and then if we go red, do they trade through yesterday's low? So this is my thought process pretty much, tactically on all of these, because that's what you have to be now, is tactical. If you're long term, keep going every single month. If you're tactical, hopefully you got out of the way when the range is broke. Maybe you made some good money short. Maybe you came in flat Monday and you were able to buy in the hole like a lot of us did. For me, it's, to be honest, I had my best day and a half of trading of the year in August because I was prepared in the right state of mind. Then took advantage of the volatility, which is what I try and teach all you guys, is to embrace volatility. Get out of the way when the 821 and the 200-day break. So when things get extreme and everyone's selling and everyone's scared, you could embrace it, buy it, and make money from it. And then when things get back to normal and charts start to rebuild and we get back above moving averages and volatility gets less, then we get back into a portfolio approach with hopefully the best performing stocks out there, which at this point is none of them. You have to wait. As far as, like just say the TLTs, it had that reversal bar on Monday, so that could have been your out right there for many guys who are riding this up. It now held the 21-day. So maybe if you sold that and you think that rates are going lower and we're going into a deflationary time period and there's no chance of liftoff this year, maybe you'd be a buyer here if you sold that. Ultimately, for this to be any good, this has to hold. But if it starts to break below 123, I think that would give us some clues that the equity bounce could be a little bit bigger. So watch this 123 on the TLTs. As far as the metals, you had an outside day also on Monday. That was your sell signal finally. This gave you a good trade from the lower end if you were looking for a trade in gold. Held here, continued. Then you had your outside day, a little downside follow through, and now it's opening a little bit lower. If you're a gold bug and you love trading it, and you're in it from here and you sold some strength, maybe into this 108, you look for a trade. And if you're shorted on this outside day and you're looking for a spot to cover, maybe this is your spot. So in conclusion, there's a lot of volatility. You have to pretty much put your opinions behind you, maybe reduce your size, and make sure you're prepared with levels ahead of time. Today, a lot of people are probably going to have short on the brain because of what happened with the the rollover yesterday, which makes a little bit of sense. We mapped out resistance 1, resistance 2. So if you're trying to play a bounce, where maybe you could sell into and take profits, and then if they act well there, maybe there's even a bigger spot. Or if you're not in them and you want to figure out spots to fade them, where resistance 1 is versus resistance 2, and then you also know where pivot support is if they try and take them negative early. My little gut's telling me that maybe at some point they do fade today, and the last 2 days, the last hour was relentless selling. So maybe we'll see if you tune into me on the radio where we're at. Maybe that changes in the last 45 minutes and they try and catch some of the shorts off guard, and maybe some of the people who wanted to be long sleeping. We shall see. But all in all, volatility is good. Corrective phases are great. They help your average cost long term. Also, changing the complexion of the tape is never easy, but it could be profitable if you are seasoned and trained in the tactics that we try and do here. You saw the opening video of our financial festival. There's a lot of great human capital that's going to be there. It's in November, it's in Florida, it's going to be a lot of fun, so you should check out the specifics of that. I'd love to see you there. And with all that said, tune into the radio. I'll put some charts out. I'll try and tweet if I can, or I'll see you at the recap. Have a good day trading.